All right, so you're making money online. Sweet. But hold your horses, cowboy, because guess who else wants a piece of that digital pie? That's right, the government. It's called taxes. Online income is considered taxable income. You're legally obligated to report it to the IRS. Don't forget to report it. The IRS will find out. Take a deep breath. It's not as scary as it sounds. Once you understand the basics, it's straightforward. Let's talk about the different ways you can make money online. There are a ton of options out there, but for the sake of this essay, we'll focus on three main categories: freelancers, gig workers, and content creators. Freelancers are basically self-employed individuals who offer their skills and services to clients on a project basis. Think writers, graphic designers, web developers, and virtual assistants. Gig workers, on the other hand, typically find work through online platforms like Uber, Lyft, TaskRabbit, and DoorDash. They're essentially independent contractors who choose when and where they work.
Then you've got your content creators. These are the YouTubers, Instagram influencers, bloggers and podcasters of the world who make money through advertising, sponsorships, and selling their own products or services. No matter which category you fall into, one thing remains the same. You're responsible for paying taxes on your earnings.
Okay, let's get down to brass tacks. When you earn money online, you're generally subject to three main types of taxes: federal income tax, state income tax, and self-employment tax. Federal income tax is money that you owe to the federal government. The amount you owe depends on how much you earn, with higher earners paying a larger percentage of their income in taxes. State income tax, as the name suggests, is money that you owe to your state government. Not all states have income tax, so you'll need to check the rules in your state.
Now here's the kicker for all you freelancers, gig workers, and content creators out there. Self-employment tax. Since you're your own boss, you're responsible for paying both the employer and employee portions of Social Security and Medicare taxes.
Section 4. Keep track of your loot income and expenses. One of the most important things you can do as an online earner is to keep accurate records of your income and expenses. Trust me, this will make your life a whole lot easier come tax time.
The good news is that tracking your income and expenses doesn't have to be complicated. You can use a simple spreadsheet, a dedicated accounting software program, or even just a good old-fashioned notebook. When it comes to tracking income, make sure to keep records of all payments you receive, including the date, amount, and payer. This includes everything from direct deposits and PayPal transfers to checks and cash payments.
On the expenses side, keep track of any costs that are directly related to your online business. This might include things like software subscriptions, website hosting fees, advertising costs, office supplies, and travel expenses.
Section 5. Tax forms. Your new best friends, not really. Tax forms. Those delightful documents that we all know and love. Okay, maybe love is a strong word.
Freelancers need to know Form 1099 NEC for non-employee compensation. Content creators might get Form 1099 MAC for ad revenue. Everyone files Form 1040 for individual income tax. The IRS website has resources to help you navigate tax forms.
Section 6. Deductions. Saving money the legal way. Now for the fun part. Deductions. Deductions are certain expenses that you can subtract from your income, which can lower your taxable income and ultimately reduce the amount of taxes you owe.
As an online earner, there are a number of deductions that you may be eligible for. So it's important to do your research and take advantage of all the deductions you're entitled to. Some common deductions for online earners include
home office expenses, business expenses, health insurance premiums, and retirement contributions. Keep in mind that the rules and regulations surrounding deductions can be complex and may change from year to year. It's always a good idea to consult with a tax professional to make sure you're claiming all the deductions you're entitled to.